NARCL, or the National Asset Reconstruction Company Limited, was pretty much announced in the last budget. It's something which has been on the cards for some time now and has been seen as a way to ease India's NPA problem, or stressed asset problem, plaguing Indian banks, the Indian financial system, and especially public sector banks. So this plan, which is broadly known as the bad bank plan, has gotten more shape today and more details of how it will work. So cabinet has approved a guarantee that the government will essentially give this company for 30,600 crore rupees over 5 years. Assets have been identified in 22 stressed accounts worth 90,000 crore rupees for transfer to the National Asset Reconstruction Company in the first phase. Public sector banks will hold the lion's share in the NARC, and then private sector banks will also come in. And the idea is essentially to clean up the books of Indian banks, especially with stressed assets that have very little hope for recovery. So how will it all work? Before we get to the analysis and the discussion, let's just play out for you what the finance minister said today.
So if I started with 2015 asset quality review, recognition, resolution, recapitalization and reform, today we see that the banks have come out. The only thing which, as was promised in the union budget of 21-22, is to set up the National Asset Reconstruction Company Limited, so that those assets which are sitting in the balance sheet of banks, which are NPAs, for which provisioning has been done, full provisioning has been done over the last few years, there will now be an asset reconstruction company which will aggregate all this, collect it and take it over, make sure that the managing and disposing of it is done professionally, and which will therefore result in banks' balance sheets and books being cleaner, transparent. They will now be able to stand on their own and do their business. We have proved it because banks are going out and raising resources. So the setting up of the National Asset Reconstruction Company Limited has this as the background.
NARCL has already been incorporated as a company, and the name National has also been given by the Ministry of Corporate Affairs because there is more than 51% holding of the public sector banks. The license is in the process of being issued by the RBI, and in the meantime the cabinet approval has also come. The assets which are to move to the NARCL in an aggregated form and get warehoused there in the initial phase has already been identified by the lenders. The valuation also the NARCL has done, based on which this guarantee is also being invoked, where there is an 18% weighted average that has been accorded to this whole thing. Projects worth about 2 lakh crores toxic assets have been identified in the first phase. Those which are completely provisioned, worth about 90,000 crores are going to move to the NARCL.
So a total of 2 lakh crores worth of stressed assets will eventually move to the NARCL, 90,000 crores in the first lot. So what is the mechanics of it? How will it all work? To understand some of this, I'm joined today by Sunil Mehta. He is the Chief Executive of the Indian Banking Association. R. Gandhi, former RBI Deputy Governor, is joining us on the show today, as is Maithili Bhusramat, Consulting Editor, ET Now. Welcome to all of you, and thank you so much for speaking with us. Mr. Mehta, let me begin by, asking you how it will all work. This is something that the IBA has proposed, been involved with on day one. Are you today feeling confident that the bad bank could be the answer to India's stressed asset problem?
I think it's a very relevant point that you have raised, and bad bank will be basically helpful in resolution of the legacy stress assets. This may not be a solution for all the ongoing NPAs, ongoing stress assets, because ultimately the effort has been made to work on the model of aggregating. Right now, they've got a lot of ARCs, but they don't have the bandwidth to aggregate the large side of stress assets, and that do not enable them to come to the resolutions. Now, this entity has been promoted by the banks. It has got some unique advantages. One of the unique advantages is the SR issued by the NARCL will be backed by the Government of India guarantee. And once it is backed by Government of India guarantee, these security receipts can be traded into the secondary market, because at least they will have some dependable realizable value as per the face value which is guaranteed. And there can be appreciation, because a lot of assets may have a better realization. Some of them may get a going concern, because now this is a twin structure. The first structure, NARCL, will aggregate the debt. Since this entity is owned by the banks, they will be more than willing, and we have already identified the first lot, as has already been announced by Secretary DFS. We have identified the first lot. Now that lot will be transferred to these NARCL, but it will be on a market driven. It's not that something which is going to be done arbitrarily. So they will propose a price, and for that price there will be a Swiss challenge. Even other ARCs can be invited to challenge that offer, and if they can improve the offer for which NARCL is not prepared, even they can take over the assets. So this will be put to a market mechanism where it will be put for a Swiss challenge method, and once the Swiss challenge is done, after that the assets can be transferred to the NARCL. Since the lenders will be getting the entire amount, just like 15% as cash and 85% as SRs, which are guaranteed by the government, they will have a definitely write back of their provisions. The 15% which comes as a cash can easily plow back as a capital. Easily it will be shown as a profits, because these assets which are going to be transferred in first phase are already legacy stress assets, which has already been 100% provided for. Right, as regards 85% of the security receipts, since they can be traded into the market, the moment they are sold into the market, they can also be converted into cash and can be plowed back into the bank's balance sheet. So that will help the banks in strengthening their balance sheet, reducing their gross NPA ratios, reducing their net NPA ratios, and augmenting their capital, because they have already provided 100% for. So whatsoever is the recovery will be a plowback of the profits and capital. Now the modalities has already been worked out in details. The government India is coming out with a 5-year guarantee, and the 5-year guarantee is basically has got an incentive structure. Every year, if you delay, like there is an incentive for a quick resolution. Every year, the guarantee percentage which the NARCL has to pay to the government will keep on increasing. So if you resolve anything within 5 years, if you resolve in first year, I think you are in a most advantageous position. If you resolve in the 5th year, a part of the guarantee fee you have already paid, and that will be outgo. And if you are not able to resolve it in 5 years, then the guarantee will not exist. So this will incentivize the lenders in taking a decision within the time frame of 5 years. Now, a lot of people will say that the time frame may be less, but I think we have to understand that all these assets are legacy stress assets, which have already been 100% provided for. So they are 5-year-old or 6-year-old or maybe 10-year-old. So if we are able to aggregate the debt and able to resolve them, then of course the realization will come, and there's nothing for the lenders to lose at this point of time. The second is the aspect of this operational aspect of this is, since this will be operated in a market-driven mechanism, there will be true sale, and since it will be a true sale, then because it is open to a market, anybody can. Any qualified institutional buyer can bid for it, and if they are qualified and they can bid for it, and they can match the offer made by NARCL, and NARCL do not want to increase their offer, or they can improve the offer, then of course under Swiss challenge it can be taken over by the other entities. So it's quite transparent also. So in nutshell, this will have a basic unique advantage of debt aggregation, because individual entities, individual ARCs were not able to aggregate it, since it is driven by the IBA and all the bankers are together. So collective decisions have already been taken for few accounts, and may be taken for the rest of the accounts in times to come. So there will be quick transfer, and the quick transfer will increase the value. And since the SRs are backed by the government, the banks will be able to realize better value instead of selling it individually to individual ARC or selling it to individual investor. They will get a better value, because any buyer who will come for a purchase of these assets, he will know that they have to deal only with one entity. They don't have to go to 20 banks to get the title, or don't have to 20 institutions to get the hold
Right.
of that. And the another thing, operational aspect of it is, the
So,
second aspect is India Debt Resolution Company. That is a professionally managed company that will be in the private sector. Advantage why this twin structure has been created, because NARCL will do the debt aggregation, but IDRCL, since being a private entity at a micro-driven people, they will be able to mobilize better proposals and better valuations. And there can be different type of resolutions in individual cases. There may be certain, for example, there is a real estate asset where 80% investment has already happened. Just because of one reason or the other reason, because of the problems with the promoter, they could not complete the project. So this entity, IDRCL, as a managing of the asset, will be able to raise the funds, complete the project, create a value for it, and sell it into the market. And since the lenders
sure.
are backing this entity, so they will be having
Okay.
easy access to the funds.
Mr. Mehta has explained in great detail how the bad bank will actually work, and has covered most of the question marks over there. But Mr. R. Gandhi, the biggest question mark of all is actually finding a buyer, isn't it? Within the 5-year time frame. Do you see that as a big challenge, or at the end of the day it doesn't matter too much, because as Mr. Mehta says, the banks have nothing to lose. They've already provisioned for these stressed assets. Anything they get is a win-win.
Yeah, thank you. I don't think that it is a really big challenge to face on. If you go by the IBC process, under which resolution have taken place in at least 1/3 of the total referrals which have gone to IBC, that way the system could find suitors for picking up those assets. There, in comparison with that experience that we had in the last 2 years plus of IBC, so that gives us a confidence that under the NRCL also we should be able to find suitors for these assets. Yes, the challenge could be only two, in the sense that minor challenge. It is not a big challenge, in the sense that these assets are of really very high value as of now. And I mean, the exposure is quite high. So the expected value will also be, in terms of absolute numbers, it will be higher. So that is one. And secondly, to compensate for that, just now as Mr. Mehta mentioned, that the suitors now need not be negotiating with by several creditors in the creditors group. It will be NARC only. So the decisions could be faster, and understanding would be faster. So that way, the challenge of that earlier we faced, that won't be there. So that's why I'm confident that under this procedure also, there will be suitors, because there are always people who are wanting to buy in the bad assets. Only the right price, that is what had been the problem. There, to arrive at that right price, the new mechanism, the IDCL, because that is going to be professionally managed with the private sector participation. So that should be able to really ferret out the right price for the assets to be sold, and NARC is being a single authority to do that. So by combining these two, I think that the challenges will be easy to face.
Maithili, do you agree with that this is the perfect combination, that for one, the NARC, unlike all of the other ARCs, is one single entity? There is a government guarantee backing, the difference in price of what is eventually realized, which increases more confidence. So perhaps the NARC will move ahead where other mechanisms and the IBC didn't, especially for certain kind of very sticky stressed assets.
Well, Tamanna, I really don't quite share the enthusiasm either Mr. Mehta or Mr. Gandhi, because yes, it is true that there will be some cleanup, because banks will be able to get rid of these bad loans from their balance sheets. But the cleanup is essentially cosmetic because what we are doing is transferring from the balance sheet of one public sector bank to a new entity, which is also majority public sector owned. So it is essentially a cosmetic cleanup. And it's also not very clear how NARCL is going to be better equipped to realize the value, because as we've seen, recovery is not easy. We've gone through the IBC process, and there also resolution professionals, etc., have not been able to realize very much. In fact, the experience of IBC as a standing committee on finance, the parliamentary standing committee has pointed out, is not particularly good at all, which is why we're talking about amendments and changes in the IBC. So it's very unlikely that NARCL will be able, or the debt management will be, IDC will be able to manage, get a better recovery. But yes, what it will do is that it is in the circumstances, the reality is that public sector banks have not been able to write off their NPAs even where they are fully provided and where they know that very little value will come, simply because they're apprehensive that when they transfer or when they get rid of these, write off these NPAs, there'll always be so many fingers that are pointed at them, saying that there's some crony capitalism, there's been some underhand dealing. So to that extent, since you're transferring to another public sector owned entity, those issues will not be there. So they will be more willing to transfer it to NARCL. So that, to that extent, it will clean up their balance sheets and they'll be able to devote their energies to other routine banking activities rather than pursue the recovery process. But is recovery going to be better? I doubt it. Are the security receipts going to be traded? I doubt it, regardless of whether the government is guaranteeing it or not. I don't see any bias for this. But as I said, in the circumstances, it is a partial solution for the bad debts issue of public sector banks. It will partially clean up their balance sheet. And this is an idea which has been in the process for the past almost 10 years. It hadn't progressed. So I'm not very sure that it will work so wonderfully well as Mr. Mehta has outlined. But yes, it will help clean up the balance sheet, but it is a cosmetic cleanup from one hand to the other.
Mr. Mehta, is it like hiding away the dirt under the carpet, as you know sometimes happens, a cosmetic cleanup, as Maithili said? And she has an important point there, because it is the same public sector banks who are going to put in money into the NARC, and then they're going to receive 15% of those stressed assets as an upfront payment. Then they're sitting with those SRs, which all realization depends on actually finding buyers within a time frame of 5 years, which you yourself have said can be pretty tight and challenging for assets which are legacy stressed assets.
So I'll have to supplement the information. One important thing which we all have to realize is the basic USP of this entity is debt aggregation, which was not available earlier. Because all individual banks, all individual lenders, maybe financial institutions, were there taking their independent decisions. You can very well understand, if a house is owned by 20 people, any buyer will find it very difficult to buy it from the 20 people. But if they all transfer their right to one person, it becomes much easier for a buyer to acquire that asset. That may be inherited by the 20 people, and that asset can be refurbished and sold at a market valuation. So at least this will be a value addition. As regards cosmetic cleanup, it's not a cosmetic cleanup for the simple reason cosmetic cleanup would have happened if the banks would not have provided for it. So banks who have already provided for it. Now it is a matter of aggregation and realization of the value. Now, how the best value can be realized? So one option is debt aggregation. That provides the sellers into a better footing because they have a better negotiating power. Now, to manage this, an entity that is India Debt Resolution Company has been created, which will be professionally managed by private sector and the public sector together. And let me clarify, NASCR is being participated by both public sector and the private sector banks. We have got a mandate from all of them, and all the whom we have invited as an IBN, they have joined us, and we are open to it. Private sector, public participation, both are there in the NARCL. And IDRCL is basically, since it's a professional body, so it is majorly owned by the private sector, so that people don't think that there is any flexibility in decision making, and they enjoy the better ease in taking valuation decisions for putting asset on the sale. Now, another issue which has been flagged is whether the sale of SRs into the secondary market, Maithili was a bit apprehensive about it. Yes, I do agree. So far, there has not been trading of the SRs into the secondary market. And the reasons were simple. Because every ARC Very few of them could acquire the entire assets. They have acquired one asset from a part of an asset from one entity, but they could not aggregate the debt. And those and SRs, if they are traded into the market, the investor is not sure whether they will be able to realize any value for it or not. But once the debt is aggregated, SRs are guaranteed by the government, and there is an incentive for the bankers to dispose it of within 5 years at whatever value they get. I hope bankers will be too willing to sell it because they know enough time has already gone for provisioning. They have already provided for, they have tried their recovery mechanism for so many years, they could not succeed. Now it is a time. It's just like even if they sell it at a salvage value or a liquidation value, that will be a win-win for plowback of the capital. That will be a plowback of the profits because they have already been provided for.
Yeah.
So I think it's a very
Yeah.
good enabler that has been created. And thanks to the government for supporting this initiative of the IBA, that they have come out with the guarantee and provided all the support. And I hope this is an initiative of the bankers themselves. It's not, it has been imposed by someone maybe. So since it is an initiative of the bankers, I'm optimistic about its success.
Yeah, let's get a scope of whether this 30,600 crore rupee guarantee is enough. Mr. Gandhi, overall, 2 lakh crore rupees of assets will be moved to the NARC, 90,000 crores in the first phase. The overall GNPAs are estimated by some accounts to hit 10 lakh crore rupees by March 2022. Will this scheme eventually have to be expanded?
Down the line, NRCL, because once it has come into existence, it is likely to be there for a longer period. So further assets from the banking system, it should be hoping to buy and resolve. So that's a normal business proposition. So even though the initial objective is to take over 2 lakh crores of rupees worth of bad assets from the public sector banks, down the line, once based on its own successes and resources that it could command, raise it from the market or from the owners, it will be expanding. So long as there is business, they will be able to do that. So that's why, to hope that a government guarantee will be coming for the future one, that is not the right now to be debating, because that depends upon how fast and how much of the current 2 lakh crores of assets it is going to resolve. That will give us the indication whether further support from the government will be needed for the expanded balance sheet of NARCL.
Maithili, do you think that the advantage that the NARC will have of having aggregated assets will make this the sort of method of choice for stressed assets or legacy stressed assets over the current IBC system and the current ARCs?
Well, not at all, for the simple reason that under the IBC process also, you have a committee of creditors. And in fact, the entire asset is, the RP is trying to find a buyer or trying to find some recovery for it. So I do not see how, if IBC did not work, and IBC with a time limit of 270 days, the extended time limit has really not been a success. I really fail to see how this can be a success. But as I said, the only thing that it does do is that it enables public sector bankers to take the courage in their hands and write off or remove assets, NPAs, from their balance sheets. In the case of a private sector bank, if an asset has turned NPA, they make a provision and promptly write it off. And the matter ends there, right? But in the case of the public sector bank, you're very hesitant to do anything with an NPA simply because a finger would be pointed. We've seen the case of what happened when PNB tried to sell its stake in PNB Housing, reduce its stake. So many fingers were pointed at it. So in the public sector space, public sector bankers are very hesitant to do anything that might boomerang on them. So this process enables them, in the case of fully provided assets, to get rid of it from their balance sheet. That's about the only purpose it serves, I think. We're talking about recovery. I do not think recovery is going to be any better, because remember, you might have a debt managed resolution committee, etc., company, etc., but it has to go through the same process. You have the same legal system, you have the same system, the ecosystem that you're functioning in. So what makes us think that the recovery will be any better? It will not. But it will address this solution, as I said, of giving public sector banks the ability to move on by getting rid of some of their assets which they didn't have the courage to write off, which in the banking, normal commercial banking, you would have written off.
Kamna, can I respond to Maithili?
Yes. Yes, yes, please.
The IBC process, whatever resolution which have taken place so far, that is sizable. As I said, that 1/3 of the cases have been resolved. And all those cases, there are a lot of public sector banks' participation as a creditor. So there, it is not that, yes, the problem that Maithili explains is definitely there. That will be helped by the formation of NARC. That is definitely a collateral benefit we are going to have. But that doesn't mean that that is the only benefit. Because under the IBC process also, public sector banks have participated as a part of the say resolution system, and they have found value to the extent whatever was has been successful. So that's why to completely negate that the IBC process will not be useful at all, or resolution process will not be useful at all, that is something too far-fetched. Yes, we would have desired much higher success from the IBC process. That is certainly a work in process. But so far, whatever has happened, that we should build on. That's my view.
But Tamanna, if I may just come in, the Parliamentary Standing Committee on Finance had
All
come
right.
on very harshly on the
Yes.
IBC resolution process. So it clearly isn't, as wonderful as it was meant to be. Yes, it has disciplined borrowers, that I will agree. But these are all partial solutions. The ultimate solution will have to be to change in the governance of public sector banks, and public sector banks having the courage to take commercial decisions and understand that losses are part of commercial banking. And there are bona fide decisions and malified decisions. A bona fide decision can go wrong. There is nothing wrong with it. That is, I think, what public sector banks need to have the courage to realize, and government must stand behind them when they do that.
Okay, let me give the last word to Mr. Mehta on this very interesting debate that is going forward. Mr. Mehta, you agree that at the end of the day, the governance of public sector banks needs to be the ultimate solution?
One thing I definitely agree that governance is the key factor for any public institution, made by the public sector bank, made by any entity. And governance issues are not isolated to the public sector bank. There are governance issues in private sector banks also. We all have experience in the past, and I need not mention it. So just being a public sector bank, the governance issues are there.
Yes.
That is something too much to say. But I'll say that governance issues are important for each and every entity which is existing into any space, including banking sector. Now, as regards improvement of the governance sector, I totally endorse Maithili's views. Yes, there is a need for improvement. But so long as in the context of NARCL, I can very well say that governance issue will not come into the way of taking decisions in this matter, because it's a win-win situation. Whatsoever value the assets are salvaged, the bankers are going to get a right back. That is one area. And to incentivize them, government has given the guarantee as well as the time limit to resolve these issues. Third important factor, which I really feel and must be appreciated by everyone, is that all these assets which have been resolved under IBC, there is a lot of change in balance. Before IBC, a stressed large size asset was only a problem of the banker. The borrower will say, sir, your asset is into problem. Either you restructure it or help it, and that's your problem. Now with the IBC, since some large size assets have been transferred the hands, the ownership has been shifted. Now the corporates feel that if they do not meet out their financial commitment, tomorrow they can lose the assets. And that has happened in some of the large value assets, which could not have been, say, if you would have gone to a legal process, that could have taken 10 years to resolve. At least it is resolved in 3 years.
True. That is true. IBC has put the fear of God in several large debtors. There is no doubt about that. Could it have been more efficient? Could it have yielded better results? Well, I'm sure everyone will agree, perhaps yes. Will NARCL do the trick and succeed where the IBC process didn't? Well, we can only hope so. So thank you to all of you for joining us today on this very important discussion on what is a big day. We're getting finally the shape of what India's bad bank will look like. Staying